morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, rather. Excuse me. It's September 1st. Wow. We got just a couple of items here on the economic calendar, as you can quite see here on this page. We'll start with the IHS Market Manufacturing PMI for the month of August. So uh, the number we had back in July was 50.9. Anything above 50 on these indexes indicate growth. So the previous reported one that came in, because we'll get like a little estimate earlier in the month, came in at 53.6. So that was the forecast to continue that. It slightly dipped, but still it grew from the July's number, which is what we are still happy about, which is at 53.1. Now we get the gold standard here of ISM manufacturing PMI for August. And in July we had 54.2%. And the forecast was supposed to be a slight uptick to 54.5. And it came in all the way up to 56%. This is the hottest number we've had since January of 2019. So, about last year and a half, this is the best number we've seen in a little while. So, this is very good news that manufacturing is picking up quite a bit. Now, we've had some reports in Europe as well as China that their manufacturing is expanding a little bit as well. So, that's on a global level, this is a very good news that we're starting to see economies kind of get back to hopefully some type of norm. Last but not least, we got construction spending for the month of July. In June, of course, with the lockdown and everything, we had a 0.5% drop in construction spending. However, it was supposed to have a big uptick of 1% in July, and it just barely increased as some states went back into some type of lockdown and with 1.1% in the month of July. So let's jump over to the headline news, see what's going on with the stock market now. Right now, stocks are up. Of course, the Nasdaq Technologies stock's been taking up. I've been reading a little bit. Investors are going to probably start reevaluating where things are at. They really liked, of course, the thought that there are going to be ultra low rates for quite some time. People are projecting maybe even next 5 years, maybe beyond. So they're pretty excited about those prospects. They're also excited. So they're going to start reevaluating where things are at in terms of if we're overvalued on the stock market. So you may want to. It could be a little bumpy ride if they have to reevaluate, maybe pull back a little bit, because obviously we're looking at a lot of different factors. That right now stock market's been going up based on optimism, and we still haven't seen the numbers yet to support that optimism. And of course, we have to kind of wait until we get that. So you may see a pullback at some point in the near future as it corrects itself and makes it even to where the reality is. So anyways, let's see how this is playing out in the bond market, see what mortgage rates are doing today. Right now we are improving a little bit. Yesterday we had a nice little pullback increase. I think we were only up a couple points yesterday morning when we did this. Ended up closing up about 25 basis points. So a lot of lenders did end up having, or no, not 25, but I think it was close to like 16 basis points. So a lot of lenders did price a little better. We did get a price improvement. And then right now we're up about 8 basis points. We did start the morning a little bit lower, which you'll see reason being next page on yields. Right now we're testing the 50-day moving average or 25, excuse me, this is 25-day moving average, trying to get above the 25-day moving average. So pricing was better than what we had yesterday morning. However, not too far off from what we saw at the close when after lenders had repriced for the better yesterday. So let's take a look at those yields as we talked about. Yields have come down. We're way up here. That's what I was talking about with the we did start the morning a little bit lower as here yields were adding more pressure all the way up to about 0.73 earlier today. Right now it's pulled back below this floor of support, and we're heading down towards the next floor of support here at this level. And right now we're just down below 0.7% at 0.6966 currently, which is we'll see if this continues this trend downwards to help alleviate some of the pressures on mortgage-backed securities, and hopefully we can get to some those levels we saw earlier about a month or two ago. All right, so that's pretty much it for the day. If again, our mortgage rates are better than yesterday morning, however, about the same as where we closed yesterday. I hope that makes sense for you guys. And if you guys want to get more information on mortgages, I am a loan officer, work with a national lender. I'm going to leave a link for you to be able to click on. You can go over there and see get information on different loan programs. If you got any FAQs, if there's any information you're looking for the process or anything along that line. If you want to reach me, we can certainly talk about refinances or purchases. If there's different strategies we can utilize. I've helped many different people, from investors to people looking for second homes to those who are looking to primary homes, either buy up or down for some home buyers. I've worked with quite a variety of people, and I certainly can help out you with your situation. Just go ahead and reach me through the website. So stay tuned. At the end of this video, you'll see the link. Also, I'll put the link in the description. You guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.